Hi, this is Abid Hussain Malik from Abid Financials. Welcome to our third video, Section 3 Banking of Study Material QuickBooks Online Level 2. Today we shall discuss study material of banking section, and there would be 8 questions in this section which will be asked in your exam. Let's discuss content of this section. You will see 3 points here: working with corporate credit cards, and dealing with failed payments and voiding checks, resolving bank feed matching issues. So these are our main content which shall be discussed one by one. So let's start our first section. I want to introduce myself. I am Abid Hussain Malik, CPA, Corporation Plus, and 10 years of experience, and provide my services to worldwide clients. And if you need any help or have any question, please let me know at my email address info@abidfinancials.com, or you may contact at my WhatsApp number. I also provide bookkeeping, accounting, payroll, taxation services to my all clients, and I also deal with certification services like level 1, 2, payroll, desktop, enterprise, and individual bookkeepers. I also deal with the QuickBooks Zero Pro advisors and payroll certifications. I have created these videos for you. You may visit my YouTube channel and check the playlist. Let's move to our content. First topic, it is working with corporate credit cards. First of all, we should know what is corporate credit cards and how it's work. Workflow of credit cards is the same for any banks in that you need. First of all, we need to set up these in a chart of accounts and manage transaction and bank feeds, record the payments, and pay down the balance, reconcile them. So this is normal workflow, normally as we see in checking and credit card accounts. But the difference about working with corporate credit cards, so this is main thing. Corporate cards can be issued to multiple employees, and with a company setting usage policy and limits for each card holder. In a sense, you may see that company has one account, that is main account, and under the one account it issue the credit card to the many employees. So this is called the corporate credit cards. One card is designed as primary card, so this is how it's work, and they may be card to which only payments to pay down the balances and fees are applied. So this is a function of primary card, and the primary card holder may also use it to make the purchases, can also be used for purchases. Additional cards are issued to individual in the client organization as required. Here's how a setup with these card holders could look. For example, credit card number 1, 2, and 3. Here this is main primary card, taking the payments, making purchases if required, and the non-primary cards only used for making the purchases, and at the month end their payments are made from these primary cards. How corporate cards set up in the QuickBooks. To set up credit card within multiple card holder, you need to create a new parent account in a chart of accounts. Then individual card holders should be created as a sub account there. Next, you connect sub accounts to bank feed from a credit card company, but you do not connect parent company to the bank feed. Okay, when you connect sub account, then there is no need to connect your parent account. So this is a main concept you should know about this one. Okay, for example, this is parent card, Bank of America CC, and under which there are 3 credit cards like 9518, 6773, and 9707. So this is main heading of credit card, and here this is primary card, and these are 2 sub accounts, non-primary accounts. Overview of setup task. Now we shall discuss in details how we shall set up. Create the now account in the chart of accounts and connect non-primary sub account, and decide how it should be, if and how to connect. So first we shall discuss create new accounts in the chart of accounts. To create, first of all, we need to create parent account. The first step is a corporate credit card with multiple cardholder is to create a new parent account in a chart of accounts. This is the main step. To do this, you need to go to chart of accounts and general settings, and top right corner we shall create as other account. Here there is nothing else. Here we shall only select credit card, and then details also we select the credit card. And to help identify this account from the others, give the accounts as unique name. For example, you could call it as parent together with the credit card business and name. Example, Bank of America for BOACC, this is parent, and under this one there would be a primary and non-primary account. You can add unique reference and description as a note is used to group corporate card, documenting this accounts place process. Leave the opening balance and field blank. This is very important. The parent account will never have a balance. It's simply there to hold group of the sub accounts. Okay, and creating the sub account. To create sub account, select parent account you have previously created and save the number. This is parent account was created, and select the credit card for account type and detail credit card. This will be same. Give the new sub account as unique number. You can easily identify your recording transaction. If you could add last 4 digit of core card holder, it would be good. And the primary sub account, you can may also find it helpful to include primary in the name. So there we shall write the primary, and in the description you may use receive the payment and the no charges. So in the reference description, you may want to identify the person is associated. You may also write the person name. It's up to you how you shall manage this one for your reference in the future. See the payments or use a credit card as well, documenting this process. Leave the opening balance blank, and before here just we need to write the dates and connect non-primary account. This is second point of our overview task. Here you're ready to move on to the second step of the task in the corporate card. This is connecting all non-primary account to appropriate cardholder to link the bank feeds. You are not connecting primary sub account yet. We are just connecting non-primary account. To connect non-primary account, follow the standard process for connecting a bank. Once connected, will have its own tie in the bank transaction tab, and credit card transaction will come into QuickBooks via bank feeds. And if you have only recently connected sub account, you may need to select update to get all transaction, as usual we do for everyone. So now we should decide if and how to connect the primary sub account. The final setup step is where it's get interesting. And primary account to the credit card company, which transaction you add from the bank feed. So it depends upon how payments are going to be recorded in QuickBooks. This is dependent upon whether the primary account is used for recording payments only, if it's also used to make the purchases. So it depends upon whether the primary account should be connected, primary account bank feed should be connected or not. So these are the main 2 points on which we shall decide. How are the payments to credit card going to be recorded in the QuickBooks? So there are 2 recommendation method for recording payments, and method you ought to use determine what you do with a payment transaction that come in via bank feed. Method 1, enter the payments manually by creating expense transactions to split them between the different sub accounts. When it is used, it is good way to record. If you are paying off full credit card statement, then you shall adopt this method, manual method. Method 2, posting payment transaction from payment bank account to the primary account. So this is just posting or transfer. You may just consider as when it is used, it is if you are not paying off the full balance, then this method shall be used. This is very important, and you are not required to pay the payment. So these are 2 methods. When you are the one simple thumbnail is when you are paying full amount and splitting amount, then it will be manual, and when you are paying half balance and do not want to split, then transfer or posting transaction shall be adopted. Is the primary sub account used for recording payments only, or it is used to make the purchases? So it depends upon the primary account. Should you connect primary account to bank feed if you are using method 1? And you should connect when it used for both purchases and the payment. Add the purchases transaction but not the payment transaction to the QuickBooks. You shall be adding payment transaction manually, so you need to exclude them from being added to QuickBooks Online bank feed. You could do this by creating a rule to automatically exclude the payments transaction from being added to the primary account. So a rule can be created. You should not connect it when it is only used for payment. Then you will be adding payments transaction manually. Should you connect primary account to bank feeds if you are using method 2, posting payment transactions from payment bank account to primary account? So this is the main question, whether we should connect our primary sub account for the bank feeds or not. So here we discuss if we are adopting one method, so we should connect or not. If we connect, what should we do? So this is discussed. And here if we adopt the second method, what should we do? So this is discussion in detail. If you are using this method, you should connect primary account to the credit card account, regardless of whether credit card is used for just payment or both purposes. Transaction will come in automatically via bank feed. QuickBooks will automatically match the payment transaction to the corresponding transactions for the payment of bank, assuming bank is already connected to the bank feed. So decision making matrix, how there is a summary when you should connect the primary account to the credit card, or how you should add transaction to the sub account. So this is a main summary. It will help to understand. So entering payments manually, this is a first method, this is a second method, and under the first method, recording payments only, and recording payments and making purchases. There is only one purpose. There are two purposes, and if this is only payment purpose, just don't link the primary account to the banking feed. Manually add the payment transaction by creating an expense account. So if there are both, then link the primary account to bank feed, set up the purchase transaction to be added automatically, exclude the payment for being added automatically. Manually add the payment transaction by creating an expense account, then you should add the manually. And the second method, if you are adopting, this is link the primary sub account to the bank feed, set up payment transactions to be added automatically, and link the primary sub account to the bank feed, set up payment and purchases transaction to be added automatically. In this way, all things are automation process, but here these are on a manual basis. Okay, now we should discuss overview of regular tasks. So there are 3 points: record the payments expense, record payments primary sub account, and reconcile the parent account. So we have understood there are 3 things. First one is parent account, and second is primary account, and third is sub primary account. So now we shall discuss in details the recording. Record payments using an expense transaction. How to split a payment between different credit cards using expense transaction. This would be discussed here, and this is the quickest way of recording payment if you are paying off full statement balances. It can also be used for partial payment, and you could allocate across account by percentages, or by paying off all or one of any, or putting the rest of the payment on another. So this is main things you can use, like on percentages basis or by paying off all of one card and putting the rest of the payment on another card. So in this way you can allocate the payments. So how you shall do this? This is an expense account, pay Bank of America checking account, and here you shall divide your balances. This is parent account and parent account, and the card's share of liability, and here you are writing some amount and other is here. Total amount is 2166.76. Tips to do the payments. Payment transaction will now match when they come through bank feeds from the payment bank account. However, you use split transactions on the card side, you would not see the full amount of payment in the primary account. The advantage of this method is it split the payment across the sub account, and so when you look at the balance sheet, the balance of cash sub account is correct. So these are some benefits. But flip side is that you never see the full payment of anywhere in the credit card registers and on the reconciliation screen. You shall need to manually reconcile split transactions. So these are, like you may see, these are pros and these are cons. We can say that disadvantage. These are advantages. So here we shall discuss some other things. Recording payment by posting them to the primary sub account. So what's our benefits and how it works? And then there is another method where posting payment to primary sub account. You would use this method or the expense transaction method for recording payment to one set of card, and for consistency you should not use both methods for the same credit card account. Posting payment to the primary account is a good if you are not paying the total amount to the credit card statement balance, and if you had rather see the full payment amount on the credit card side. That is, you want to see the total credit card payment during the reconciliation. Identified as a paired transaction. To post the payment to the primary sub account, go to For Review tab of the bank feed from the payment bank account. If QuickBooks find a corresponding amount to the primary credit card sub account for same date or amount, it will flag it for both payment bank account and primary sub account as paired to another transaction. The matching transaction in bank feed from primary sub account will also be flagged as paired to another transaction. Okay, here all these are shown as paired to another transaction. Record as a credit card payment. To add transaction as a credit card payment, select view for the transaction in the payment bank account and select record as a credit card. When you add payment from paying bank account, QuickBooks will record the transaction and match it on the other side. Here you will create in this way the account. What are the tips? An unconnected primary sub account. If you do not have primary sub account bank feed connected, you can still record the payment to this sub account, but a paired transaction would not shown here. Instead, the payment clears the payment bank account. You would code it to primary sub account. It would see the payment when you reconcile the parent account. It's important to note that you do not have to connect primary account to the bank feed because there are times when it's not possible to do so. Create a rule to post future payments to the primary sub account. You could create a rule to post the future payment. Set up the rule as money out and only apply to the paying bank account and not to receive credit card account. So in this way we should create the account. Set up a condition like which select the bank text and unique identifier, and these transactions are payment to the credit card. Unique identifier should include the last digit of the primary account. So in this way you can create a rules. And there is third step is credit card. Select the credit card here, the transaction type here, credit card payment, and in the sub account field add the name of financial institution in the pay field. Once you know the rules is working, you could use set it to auto add, so that neither you or nor your client will even have to look at it. When you're ready, select the same. Okay, now I'm showing the advantage and disadvantage of these methods. This method has few advantages, and we're discussing this method for auto rules. This method has a few advantages. First, you add the payment to the bank feed, and these payments will match to the statements. Second, you can record the payment as a credit card payment transactions, and ensuring that it's categorized accurately, so it's also ensure. Another advantage, you can make more than one payment in a statement period. That means if credit card limit is reached, a payment can be made mid-month, and more charges can be added to the card. And it means that if a client has multiple bank accounts, they can make payment from more than one account for each month. Finally, the primary account is not connected. You can have payments record automatically. So these are some benefits here. What are the disadvantages? And its advantage of this method that you have to create a journal entry to zero out the balances, to zero out the credit card liability, all the sub accounts, and this is because the payment is posted to primary account. But note that not all clients will want to do this. Some will let the balance remain on primary sub account, knowing that the parent shows the total credit card balance correctly. To correct or zero out the balances, you need to transfer balances from non-primary account to primary account via journal entry. But again, this is something all clients will want to do. Overall parent account balance is correct. If the client does not want to allocate the payment across sub account, they can zero out the sub balances, and each month balance for the whole credit card. If one remain at the month end, sits in the primary, but again the overall parent account remains unchanged and correct. So reconciling the parent account, how we shall do and how it works, so we shall discuss in details. You only need to reconcile parent account and not sub account. So this is main thing, because all the transactions in the sub account automatically roll up into the parent account. This is the main reason. If you reconcile sub account, any reconciled transaction will disappear from the reconciliation window for the parent account. So if you reconcile one sub account, and you shall have to reconcile all. If you have clients with multiple card holder on a card, reconciling each sub account individually could be a time taking. By reconciling parent account, you take care of the sub account in a one go. When doing reconciliation, keep in mind charges and interest shows as a separate purchases transactions, and because the parent is not connected, you have the option to enter that manually. But if primary account is connected through bank feed, charges and interest will be added in a bank feed. So you do not need to add them again for screen of reconciliation. So there are some tips what to look out for when reconciling a parent account. If you had a split payment, you have to manually mark the split as cleared. So this is a main thing you should keep in mind. The split should total the amount of the payment. It shall need to clear a payment manually if you do not connect the primary sub account in the bank field. You shall need to clear any journal entry that you added. And other thing is, because the parent account has no transaction posted to it and is not connected to any bank account, it does not show the clear date columns here. So you may have to uncheck the transaction that have not cleared yet. For example, purchases may have been made at the end of the month that would not post on the account until following month statement. So this was the main thing, and now we are going to discuss correct the sub account balances, how we should correct these one. You should correct the credit card sub account balances after you reconcile the parent account. You should see how to carry out the reconciliation in the next screen. So this is a main journal entry. Here you will see the debit and credit amount and transfer the liability to the primary account. So we shall discuss these things. Create a journal entry to transfer the amount of liability on the statement of each non-primary sub-account. Some transaction would not show the balance of each non-primary sub-account, just an over-combined balances. Okay. The date, the journal entry as of credit card statement is date should be the same. Date each non-primary sub-account for total amount of their purchases. Credit primary sub-account with the sum of liability of the non-primary sub-account. This should be the credit entry. This is debit entry, and this is your credit entry. Step 2, primary would have a negative balance and the other sub would have a positive balance. Journal entry puts the total balance of credit card into the primary sub account. Credit card balance will now look like this. Remember, the total balance of card due at time is balance of parent account, so it should be matched with the parent account. To save time, you could create journal entry as a unscheduled recurring transactions, because total amount of liability will be different each month and you should not enter any dollar amount in the debit credit column. You could add some guidance in description, explain the terms in debit and the credit. Reviewing the sub account balances. With account setup and reconcile, you almost done. The final thing, do check the account balances and register to make sure everything is ready to go. First, run the balance sheet report as of the credit card statement date. If you split the payment between sub-account, the sub-account will show their respective liability balances. And on the statement date, if you posted card to the primary account and then created a journal entry to correct the sub-account balance, the total liability will show up in the sub-account and the non-primary sub-account will be shown as 0. Note that if you had to uncheck the transaction and at the end of the month and that did not clear on the current statement, sub-account might have balances, and or if a journal entry was not made up to the balance all primary, there could be balance on the sub-account. There are some tips. Keep in mind, you shall need to understand the difference process of different banks for using corporate cards. Amex is different from Wells Fargo, and that is different from others. QuickBooks can handle the variety of approaches as well. You just need to give some through and how you set it up to accommodate the you are dealing with. So there is one practical question. You are setting up corporate card for a client. The card on primary is only used for payments, and you are going to post payments from payment bank account to the primary sub account. Means you are using posting account, which should you link to the bank feeds, sub account, primary parent account, primary sub account, and non-primary sub account. So correct balance is primary sub account. There are 2 recommendation methods for recording payments. Considering the situation will be determined the method used. Which method suits use case in the following example? So you are paying off full credit card balance, want to split the payment between sub account. What would be the suitable method? Enter the payment manually by creating an expense transaction. When you want to split, then you should create manual method. If you are not paying off the full balance and do not want to split, then post payment method is suitable. Now the others question is, which of the following statement about reconciling corporate card accounts are true? If you reconcile sub-account, any reconciliation transaction will disappear from the reconciliation window for the parent account. That's good. Charges and interest show as separate purchase items. So this was the second one. Now we shall discuss our third Second topic is dealing with failed payments and avoiding the checks. So this is our second topic of the banking section. Clients may sometimes receive payments from customer that bounces due to insufficient fund and a closed account, stopped payment as shown. On the flip side, clients may want to void a check and they have issued to the vendors. Find out what to do in each of these situations. Overview of the task. There are two tasks here: dealing with a failed payment and voiding a check. First, we shall discuss our dealing with a failed payment. Process a bounce check. To process a bounce check, you should create new service item for bounce check and bounce check fee. Okay, and if they do not exist already, create an invoice for customer that includes the amount of bounce check and the bounce check fee. These both should be includes in the bounce check invoice. Reset the aging of the original invoice. These three steps shall be done. First of all, create new service item and then create an invoice for bounce check and check fee, and then reset the aging of original invoice. And second is invoicing the billable time. Then we shall cancel this one. To start, let's look at how to create new service item. From the sales center, in the left navigation bar, product and services, select new and services. Here you will see new, and these are items, service item, and name the new service bounce check. As a service, we shall write the bounce check, type services, category, and here you will select I sell these services to my customers. Name the next service item bounce check fee. Map the income account to the bank charges, expense account offset the fees charged by bank, and the sale price rate. Field add fee, the amount charged to the customer for bank fee or client. Incurred plus inconvenience fee, typically $25 to $50 are charged as a charges. These fees are non-taxable, and the select from sales tax categories drop down. When you are done, save and close. Now item are set up. Move on, create an invoice for customer that include amount of bounce check and bounce check fees. Go to the new button, select the invoice, customer terms, details, and date of invoice should be matched. Date of payment was returned by the bank. Note the date of original payment or the date. Here these are terms, these are invoice date and due dates of the original invoice. It will be very helpful later if you include a note that in the memo to say this is recording a bonus payment to the customer original invoice. You may write any description here. The product column bounce check and the amount check was for. On the next line, bounce check fee and select save. Here when you create a invoice, then you shall select these one, bounce check and bounce check fee, their rates and amount. Create a new expense transaction for bounce check fee. Select new expense, payment date, and category column, select the bank charges, fill the detail and save. Last thing is to reset the aging of original invoices. Find the bounce check payment by selecting custom tab in the sales center, customer in the list, then original payment, and deselect the invoice payment was for and select the new invoice. Make sure the amount of payment is unchanged. Select save and close. Original invoice, it is unpaid. The new invoice was a partial payment to the outstanding balance should be the amount charged to the customer for bounce check fee. Now the original invoice is unpaid, and it continues to age from the original invoice date, and the bounce check fee is also due from the customer. When customer pays the amount of original invoice plus bounce check fee, you should receive the payment and post it to both open invoices. So next topic is voiding a check. Voiding a check in a current period. The second task is voiding check if vendor reports that a check never arrived. He did not receive any check. Why void rather than delete? Voiding leaves a transaction on the vendor record. This may be okay if the checks was never sent Otherwise, voiding is the best option to keep an audit trail. Have you voided a check depends on whether it was issued in the current period or prior period. Voiding a check issued in the current period is straightforward, and this is very easy, and there is a time difference, then would be some complexity. So go to the expense center and select check or bill payment from the transaction type drop down to help locate the check to be voided. Your expense center and then check, and then you will select your relevant. You can void the check if directly from expenses tab by selecting down arrow in the action column from appropriate check. Here they are saying you can select the check, and then this is edit column, and you can void this one. You can select void more button, and which means the bill will be marked as unpaid. Voiding a check from a prior period. So this is tricky and complex, so we should discuss how we should handle this one. You should not use the void check feature we have just looked at, because it will void the check as of the date it was written. So change prior period information. Instead, create a bank deposit for the same dollar amount as check to be voided. Why do it this way? When a check is voided from a prior period, the dollar value is added back to the bank account. Of course, if a check is reissued, then check amount will be deducted from the bank account. The following process will create a deposit to add the money back to checking account, and then reissue the check will deduct from the bank balance. So doing it this way means date can be determined. So this is the main things. If you avoid any check, it will increase our balance, and if we issue any our deposits, then it will reverse the action. Reference the same vendor as the original check, but make sure the date of deposit in the current period. Memo on both check and deposit should reference voided check. Copying the URL of void check from the browser address bar at the top of the screen, passing into the memo field means you have a quick way to getting back transaction in the future. During bank reconciliation process, check to be voided and deposit can be both cleared. Both transactions should be selected cleared, making effect on the reconciliation, and the zero, it would be zero. This will successfully void the check in the subsequent period. So there is a question: when recording a payment failed, why do you need to select the original invoice in the original received payment transaction? The correct answer is to reset aging of original invoice. This is our third topic of this banking section: resolving bank feed matching issues. How the QuickBooks works to match the transactions. This is the main process we need to discuss. Transactions in QB, clients, banks, and credit card activity do not always line up. Sometimes transactions are categorized incorrectly. Sometimes QuickBooks simply cannot find a match. To begin to address these issues, first let's look at what happened behind the scene and the process of QuickBooks applies when trying to match the transactions. So transaction already entered in the QuickBooks. These are total 6 steps the QuickBooks perform while matching any transaction. When QuickBooks Online download the transactions from a bank credit card, it compares the date against your client's QuickBooks Online transactions date to see if there is a match, matching the open balance of an invoice or bill payment. If there is no match existing transaction, QuickBooks expand the search to the open invoices to see if there is any match. Does a user create a rule? If there is no match anywhere, QuickBooks looks to see any rule apply. Has the same name been categorized before? If the no rule, bank consider the transaction from the past to same name account has been added and suggests the same categorization. Can QuickBooks guess the category? Finally, QuickBooks makes an educated guess based on how similar transactions have been previously categorized. Why might QuickBooks not find a match or suggest an incorrect match? Transaction is already reconciled. These are the main reasons. The QuickBooks cannot find a match, posted to the wrong account, and the date range is not correct, and the amount of the transaction posted different from the amount was cleared. What happens when QuickBooks Online finds or suggests a match? You can choose to accept a match that QuickBooks find or suggest. QuickBooks will then either link the bank activity to an existing financial transaction already recorded, or record the payment on an open invoices bill transaction to close it. It also does this for an transactions match manually, matching the changes reconciliation status of transaction from unclear to clear. Of course, transactions were not in QuickBooks before bank feed activity was downloaded. You will need to review the transactions in the bank feed and categorize them accordingly. What is the principle? Let's look. The principle of the QuickBooks uses when trying to match the find. How does QuickBooks analyze the data information? QuickBooks look the transaction from the 90 days of clear date to find matches. It's only look transactions that have not already been matched or linked. This is an example. If the QuickBooks see on July 15, but the check does not clear until 26, as no amount are seen, QuickBooks will still see this as a possible match. Transaction is reported by bank within 90 days. However, if the transaction is processed outside 90 days, you will need to search for transaction manually. Then you need to search for manually. How does QuickBooks analyze bank deposit and money in transaction? When making a match, QuickBooks looks at all sales transactions and invoices, sales receipts, payment receipts, as well as deposits. QuickBooks looks at journal entries and other money in transactions that have been created, as well as open invoices, partially paid invoices. All these are checked. If finds an open or partially paid invoice is suggested a match. If the match is accepted, QuickBooks create a related receipt payment transactions. How does QuickBooks analyze check expenses and money of transactions? When marking a match, QuickBooks analyze bills and payment for vendor. Expenses were entered either using expense or check directly to bank or credit card account, or journal entry, or other negative money out transactions. So these are seen by QuickBooks Online for this checking. Manually matching the bank feed data. If QuickBooks cannot find match or suggest incorrect match, you need to look for transaction and manually match it. They not only match the transaction, it also helps to QuickBooks improve its ability to find match in futures. To begin, manually look for create a right match. Go to bank transactions and find these transactions. If incorrect match has been suggested, select the transaction to expand the information and see the find other matches. You may also select find other matches here. This open the match transaction screen. By default, the screen only shows suggested match. If you want to look at other transactions, use the suggested match slider to turn this features off. Here you may suggested matches, you can turn off this suggestion. To help locate the correct information, select transactions type from the filter by drop down, and now you can use the search field to enter specific search terms, name, part of name, and date range from the date. This is a check. Once you have identified the correct transaction, check the box and total amount, and bank feed should be same, the amount or different. You might need to select more than one transactions to match this one. Fixing some common issues. What if transaction is matched correctly? Sometimes get matched incorrectly and you come across, go to the categorize tabs and undo these transactions in action columns, and if you undo these transactions, these shall be go to in a categorize tab. What if you find a single payment in a bank feed? When you select multiple invoices to match to one bank feed receipt transaction, QuickBooks records separate deposits for each invoice. These deposits will not match the single deposit transaction on the bank statement. Same applies to the bill. Suppose one purchase download from a bank and match against multiple bills. In that case, QuickBooks records separate bill payment for each bill matched and therefore will not match the bank statement. What can you do to resolve these transactions? because deposits pays multiple invoices, select find match and select the invoices paid. When reconciling the account, individual transactions must be manually added together to determine the corresponding amount on the bank statement. You need whatever is recorded in the bank register to agree with what of the bank statement. It should be matched with them. It's fine, the bank reconciliation goes perfectly because matched transaction will be marked as cleared. You suppose have to clear the check mark on the reconciliation, whatever reason. It could be challenges to manually add the appropriate transactions to match single amount to the bank account. How can you prevent this from happening again? Your clients can avoid this problem by completing appropriate accounts receivable or payable workflow in the QuickBooks, then letting resulting receive payment, deposit, bill payment in the match field. So appropriate receivable and workflow should be established for this purpose. How do I need which transaction match with single bank feed? Whenever you adds a match transaction in a bank feed, it moves from for review to categorize, and to see which transaction are matched, select categorize tab and then select the link to add or match column. How do I troubleshoot deposit and bank transaction? So transaction do not match exactly, find other matches to resolve difference, check the date range to broader vision because it's only look for 90 days, and you can use this method to write off small difference between QuickBooks and bank. However, in similar way, matching single deposit on multiple invoices, record resolving transaction as a separate transaction from the checked transactions. Again, this leave multiple transactions have to be added together, matched to one transaction. It could create a problem in reconciling the account. What if there are multiple transactions for same dollar amount for the same date range? QuickBooks may find multiple transactions for same dollar in same date range that could match downloaded transactions. In this case, make sure carefully select the right match. So expand it and check the name. Remember that you do not need to match each transaction individually. You can select multiple transactions, then accept and batch action you should use to group the feature. So these are some questions regarding our banking. Can you put steps QuickBooks applies when trying to make transaction in an order? Correct answers, all or the correct answer. This is the main sequence we need to follow. We have already discussed there. Transaction already entered in QuickBooks, then match open balance, then user created a rule, then same name been categorized before, and QuickBooks gets the category, and why QuickBooks not find a match, suggest incorrect matches. Why might QuickBooks not find a match for a transaction in the bank feeds? So these could be the reason: date range problem, corresponding transaction posted to wrong account, transactions are already reconciled, and amount of transactions is different from amount of cleared transaction. Why might QuickBooks not find a match or suggested an incorrect match between transaction already recorded in the bank feed? Select all options that are applies. Amount of transaction posted to QuickBooks is different from amount that cleared bank. The transaction is already reconciled, transaction was posted to wrong account, and date range was for searching is not correct. That's all for today. We have completed our third section of the banking, and if you have not watched my previous video 1 and 2, please go to my playlist QuickBooks Online Study Material Level 2. And if you want to watch this level 1 study material and answer, click on the right side and you will find all your videos there. Thanks for watching this video. See you in our next video of section 4. Thank you. Bye bye.